Canada now really looking to China as America seems like an unfriendly trading partner at this point.
Donald Trump shutting down talks on trade with Canada. He's driving so much of the Western world into the arms of China, because if he's going to deny us access to the U.S. market, well, we got to go where there are buyers, and China is the largest physical market in the world.
Trump wanted to punish Canada, but ended up pushing the whole Western world toward China. In the fall of 2025, what started as a personal clash between Donald Trump and Canadian Prime Minister Mark Carney has quietly become one of the biggest geopolitical shifts of the decade. By shutting down trade talks with Canada and imposing sweeping tariffs across allied economies, Trump has done something few American presidents ever managed. He has driven his closest partners to look east. Canada's new outreach to Asia, Europe's revived trade with Beijing, and Japan's quiet expansion of mineral deals with China all trace back to one man's belief that punishment creates strength. But what Trump didn't see is that isolation creates a vacuum, and China is moving to fill it. The moment of rupture came in early October. Trump halted all trade discussions with Canada after a television ad from Ontario mocked his tariff policies. Ottawa didn't react. With outrage, it pivoted. Within days, Carney's team was in Asia setting up talks that would include a private meeting with President Xi Jinping. For Canada, this wasn't a sudden shift. The U.S. now treats even its neighbors as competitors, with tariffs on autos, metals, and lumber, driving up costs and straining jobs on both sides of the border. Faced with that reality, Carney chose a different path to expand Canada's export network beyond North America. At home, political commentators like Scott Reed called it from the frying pan into the fire. Canada was leaving one difficult partner for another, but the decision was about survival, not ideology. When the largest economy in the world shuts its door, a middle power like Canada must find another one open. Canada is not alone in this realignment. Across Europe and Asia, governments once firmly anchored to Washington are testing new trade routes. After Trump's 25 to 35% import tariffs took effect in mid-2025, European leaders began reopening dialogues with Beijing to stabilize industrial supply chains. Japan quietly expanded its export of battery minerals to China through new port deals in Yokohama and Dalian. South Korea's businesses, long dependent on the American consumer market, signed fresh contracts with Chinese electric component buyers worth billions. Each of these countries had signed separate trade frameworks with Washington earlier in 2025, the EU in August, Japan in September, and South Korea in October, but none trusted them as lasting. Trump's willingness to cancel or suspend talks without notice left allies wondering who might be next. For them, engagement with China was not enthusiasm. It was insurance. Trump's America First doctrine was built on the idea that pressure produces compliance. Using tariffs as his main instrument, he demanded that partners move production to the United States and accept American-defined terms of access. It worked in the short run. Some factories returned, job numbers in select states improved, and the White House celebrated every new headline about reshoring. But diplomacy doesn't run on fear for long. When the president cut off negotiations with Ottawa after an ad on Canadian television, it sent a global signal that economic partnership with Washington could turn personal overnight. For decades, American strength depended on predictable alliances, NATO for defense, USMCA for trade, G7 for coordination. By replacing reliability with volatility, Trump transformed allies into self-protective actors. They still value U.S. markets, but no longer trust U.S. policy. China has been quick to seize the opening. Its Ministry of Commerce reported in late September that trade with Western economies rose 12% year over year, even as tensions with Washington deepened. Canada's own export data show rising interest in agricultural and energy shipments to Asia, particularly through Pacific ports in British Columbia. For Beijing, it's an easy calculation. The more unpredictable Trump becomes, the more foreign capital and attention drift toward China's stability. For Western capitals, the calculation is much harder. Doing business with China means lower costs and larger markets, but also dependence on a rival that controls rare earth exports and monitors foreign investment. The G7 nations don't trust China, but they also can't live without its market. That uneasy balance defines the new global economy. Engagement driven not by faith, but by survival. This is the dilemma Carney now faces. Moving toward China offers economic relief, but political risk. Canada still remembers the two Michaels and Beijing's retaliatory tariffs on canola, yet in a world where the U.S. is no longer a predictable buyer, the alternative is shrinking growth. Throughout the confrontation, Carney has chosen composure over confrontation. When Trump exploded over the Ontario ad, Canada didn't respond with counter-tariffs or speeches. Instead, the government focused on new partnerships, a $300 billion export expansion plan with Asia, and upcoming trade talks with the Philippines under the ASEAN framework. This strategy reflects a shift in tone. Canada no longer defines its economic policy by how Washington reacts. It defines it by where Canadian companies can grow. Observers in Ottawa see Carney's diplomacy as patient, almost technocratic. While Trump governs by impulse, Carney governs by balance. By refusing to escalate, he has positioned Canada as the adult in the room, the partner willing to work with anyone who respects the rules of trade, even if that means sitting across from Beijing. The ripple effects of Trump's tariffs are now visible across the global economy. The U.S. Chamber of Commerce and the World Trade Organization have both warned that prolonged tariffs risk raising consumer prices and destabilizing supply chains. By October 2025, U.S. inflation was hovering near 5% with energy and vehicle costs among the biggest drivers. Meanwhile, China's share of global trade and manufactured goods reached a record 31%, according to IMF data, its highest since 2020. Europe and Asia are quietly rebuilding connections that bypass American oversight. The West is not abandoning the U.S., but it is diversifying away from it. In practice, that means more Chinese financing for infrastructure in Europe, more Canadian grain shipped to Asian ports, and more Asian investors buying stakes in Western resource projects. What Trump saw as punishment for disobedience has become the fuel for a new economic alignment, one where China, not America, sits at the center. Trump wanted to punish Canada, but ended up pushing the whole Western world toward China by using tariffs as weapons and temper as strategy. He has fractured the alliances that once gave America its leverage. Canada's pivot to Asia is not betrayal, it is adaptation. Europe's outreach to Beijing is not admiration, it is necessity. And as each country looks for stability beyond Washington, the balance of power tilts further toward the East. History shows that when America isolates its friends, it strengthens its rivals. What we're witnessing in 2025 is not just a trade dispute, it's a redrawing of global trust. If this continues, the century that began as America's could quietly end as China's. Months of back and forth, the U.S. and Canada appear to be making progress toward a trade deal. There are areas where we compete, and it's in those areas where we have to come to an agreement that works. But there are more areas where we are stronger together, and that's what we're focused on, and we're going to get the right deal. Right deal for America. Right deal, obviously, from my perspective, for Canada. In Washington, the mood was serious. Cameras caught Prime Minister Mark Carney walking up the steps of the White House, returning for his second high-stakes meeting with President Donald Trump. It wasn't a routine visit, it was a test. It was a conversation broached by the Prime Minister about the Keystone XL pipeline, which is a pipeline many Canadians are probably familiar with. Carney had come to talk trade, but what surprised observers was the card he placed on the table. In the middle of a tense conversation over tariffs, he raised the prospect of reviving the long-dead Keystone XL pipeline, a project once buried under years of political battles in both countries. The move caught attention because Keystone is not just a pipeline. It represents the push and pull between two economic visions, Trump's drive for energy dominance and Carney's attempt to secure relief from punishing tariffs. Canada is still facing a 50% duty on its steel and aluminum, a measure Trump believes will make America stronger. Yet behind the symbolism of that handshake in the Oval Office lies a different reality. Those same tariffs are now starting to weaken the very supply chains that keep North American industries alive. By putting Keystone back into the discussion, Carney reframed the entire relationship. He wasn't asking for favors. He was reminding Washington that energy security in the United States still depends on Canadian cooperation. Trump's trade playbook relies on one simple idea: economic pressure brings results. His administration has used sweeping tariffs since early 2025, including the 10% blanket tax on most imports and a 50% tariff on Canadian metals. The goal was to drive production back to U.S. factories and force trading partners to concede better terms. But as months passed, that strategy began to turn inward. Reports from the Wharton budget model in April showed rising input costs across American manufacturing centers. Auto plants in Michigan and Ohio, both dependent on Canadian aluminum and steel, were paying up to 18% more for raw materials than a year earlier. Construction companies in Pennsylvania complained about shortages that delayed projects and raised prices. At the same time, energy firms found themselves caught in another bind. U.S. refineries rely heavily on the heavy crude that comes from Alberta. Without it, they have to import from faraway suppliers in Venezuela or the Middle East. Transportation costs alone make that crude 20 to 25% more expensive, according to data compiled by the U.S. Energy Information Administration in mid-2025. Carney's team understood this dynamic. Instead of confronting Trump directly, they introduced an option that could solve both sides' problems: expand access to Canadian oil in exchange for a more balanced tariff framework. The idea wasn't a public demand, it was leverage. If Washington wants a stable energy stream, it must treat Canada as an equal partner. That shift in tone changed the equation. Trump's tariffs were meant to squeeze Canada, but by autumn 2025, the strain was landing squarely on U.S. consumers and industries. The more Washington tried to pressure its neighbor, the more it exposed its own dependence. Donald Trump brought it back in his first iteration as president and still likes it. As recently as last spring, was talking about wanting to get it going again. Mark Carney obviously put this on the table for the president as an idea. The president, we're told, was receptive to it. To understand the weight of Carney's proposal, it helps to recall what Keystone means in the history of North American politics. The pipeline has been debated for over 15 years, spanning 4 U.S. presidencies. It was canceled by Barack Obama over environmental concerns, revived by Donald Trump during his first term, and canceled again by Joe Biden on his first day in office. By October 2025, most believed Keystone was gone for good. Even its original developer, TC Energy, had walked away, but Carney brought it back into the conversation, not as a construction plan, but as a signal. It reminded the White House that Canada's energy resources are not just commodities. They are part of a shared infrastructure that powers both economies. Reviving the pipeline would allow the U.S. to replace expensive foreign imports with oil from a trusted neighbor. It would also ease political pressure in Alberta, where provincial leaders have long pushed for a route that bypasses British Columbia's environmental resistance. For Carney, the mention of Keystone solved multiple problems at once. It offered economic logic, domestic symbolism, and a subtle diplomatic challenge. If Trump accepted, he could claim a win for American energy: independence. If he refused, he would have to explain why the U.S. preferred unstable foreign suppliers over secure Canadian flows. In that sense, Carney had turned a controversial project into a quiet test of leadership. Reports from Ottawa later confirmed that the U.S. president was receptive to the idea. No promises were made, but the discussion itself shifted the balance of power. For the first time since Trump reimposed tariffs, Canada had something the U.S. wanted badly enough to keep the talks going. Back in Washington, the optics looked familiar: a handshake, some laughter, and talk of progress. But beneath the surface, the trade dynamic had changed. Trump's tariffs were supposed to prove that America could dictate terms. Instead, they exposed the limits of unilateral power. Throughout 2025, U.S. trade data painted a sobering picture. The Bureau of Economic Analysis reported that American exports fell by 3.4% in the second quarter, largely because of retaliatory measures and higher input costs. Domestic manufacturing output slowed while consumer prices rose in sectors dependent on imported materials. What began as a show of strength was turning into a feedback loop of higher costs and diplomatic friction. For Trump, the political calculus is shifting too. Midwestern governors and industry groups, once loyal allies, are calling for targeted tariff relief, especially on Canadian goods. They argue that the tariffs are no longer protecting jobs but threatening them. Carney, meanwhile, kept his tone measured. He returned to Ottawa without declarations of victory. His message was short. The meetings were productive and dialogue would continue. Yet that restraint spoke volumes. It suggested that Canada no longer played defense. It had learned to turn Trump's tactics into opportunity. As fall deepens, both nations now face a test of endurance. The next phase of talks will decide whether the tariffs remain or evolve into a broader North American energy pact. But one outcome is already visible. The pressure that once cornered Canada has begun to circle back toward the United States. The trade war that started as a show of dominance has become a study in interdependence. And the pipeline that once symbolized division now stands as a reminder that economic strength in North America still runs in both directions. Because in the end, power built on pressure alone never lasts. The handshake in Washington was more than a diplomatic gesture. It was the moment the U.S. realized that leverage cuts both ways.